silver is absolutely exploding higher, right? Gold's on a run. Silver is up 15% or something today. And you're probably like, oh, why is this happening? How can this be? The Japan carry trade, the tariffs, the stuff going on in Minnesota, everything is coming together and we're having these huge moves up in this, right? And coming up with all kinds of reasons to justify why this is happening. But at the end of the day, does it even matter? Who gives a flying flip about all that, right? I certainly don't. Joe doesn't, who's also a profitable swing trader, fund manager like myself, an OVTLYR University graduate. Joe, like, everybody wants a reason as to why something's happening. But at the end of the day, does it actually matter?
It could be entertaining to find what the reason might be. But at the end of the day, everyone has an opinion, right? And so you're going to get all these different reasons. And really, if the price isn't going up, you're not making any money. But if the price is going up, you are. And, you know, if you want to throw news to that, that's great. It doesn't matter to me. It's just a more stressful experience, I think, when you're trying to chase the news.
It really does boil down to, do you have a plan to get in when price is going up? And do you want to put in the research and the time to understand the quote fundamentals that are going on behind it? You can put in all the research and time and fundamentals behind it, and it can go the exact opposite way, right? A lot of people use fundamentals to justify when they've made a mistake. Oh, it's the Japan carry trade, which I don't even know what it is. I don't care what it is, and I'm not trading around it. All I'm trading is what I see on the screen. But there are people who are making so many, predictions and so many YouTube videos and stuff saying this is the end of the financial world because of Japan doing whatever. Japan can do whatever the F it wants. I don't care what Japan does. All I know is I'm making money when the price of this goes up. And if it's not going up, I'm not going to be there anymore. So, Joe, what I want to do is I want to go through our existing trades, which are all silver and gold related. Then I want to go into a little bit about trading psychology, because Joe found some really good examples, and I stumbled across a very good video about how backtesting doesn't necessarily relate into profitable trading. So we've got kind of a lot to do today, Joe. So let's go ahead and get started. Welcome to the market cycle, which is probably what's going to happen to silver. But also welcome to the OVTLYR Trading Room, and I've completely botched that. There we go. OVTLYR Trading Room, the U.S. Investing Championship invitation-only live stream, where I help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. Now, we are in Plan M and Plan Sit and Cash and Don't F Up at the same time. So if you want normal returns, this is not the place for you. And we're gonna mark to market our portfolio right now, and it's roughly 25%, or not 25, no, not 25, more like 50%. In fact, let's take a look real quick at the portfolio. Oh, 74,000. This was a $50,000 account a couple weeks ago. That is so weird. Anyway, if you want normal returns, go buzz off. There's other places for you. But if you want outlier returns, now you're in the right place. All right, so when to use each plan. There's M, ETF, and Sit and Cash. Plan M is when everything is lit up. Plan ETF is our defensive plan, when we're not finding any new trades, but we do want to be in the market to capture those gains. And then Plan Sit and Cash and Don't F Up your portfolio is, as the name suggests, when there's neither one of these two available, this is where you go. And you can earn cash. You can earn money on your cash. That's what SGov is for, and that's what we're in right now. But Joe, Friday, now granted, you don't have to do this, but I will be selling out of SGov, doing the rollover back in on Monday. Because Joe, this is the one stock of all the stocks in the entire world that you can actually call the top and call the bottom. It's crazy. You can do it every single time. You can leverage to the tilt on these, and you know where to get out at the top and get back in at the bottom. So I'll be doing that. I'll be getting in, or I'll be getting out right at the very top and in right at the very bottom. Now you can buy my course for $10,000 on how to do exactly that. Get out the very top and get in at the very bottom. Chris Chains bought it. That's how Chris Chains became as successful as he was. But in all reality, this is what it does. It runs up all month long. At the end of the month, it will go down because it will pay a dividend. And so rather than putting any sort of market risk behind it and waiting several days for the dividend, you can just get out the top, buy it back in at the next day, and basically repeat the process over and over. So I'll be doing that on Friday on our Sit and Cash portion of the portfolio, which is roughly, how much is that? Trading portfolio. Okay, it's all of our SGov. I couldn't remember if we had any SPXL left. No. So I have in the $50,000 originally $50,000 account, 44,000 of that is in cash. The other 29 is exposed to market risk right now. So going back to the plan over here, we need to reduce risk before looking to add any new trades, because the most important part of the plan is planning on the plan, not going to plan. And one thing you can see right here, Joe, is what am I going through? What is the slide deck here to represent?
It is the plan. The slide deck literally tells you the steps that you have decided you are going to take as a professional fund manager, and you're going to look through these steps every day, or whatever your frequency is, and it's going to tell you, look, I got into this thing, but I already knew where I was going to get out, and this signal is where I was going to get out. Did the signal come today? Did the signal not come today? That's why it makes this nearly an emotion-free experience for you. You just follow your signals. Now tweak the plan to whatever it takes for you to be able to trade your plan so that you can follow these signals. But once you've done that, you just follow it, and it's just let the money come in and cut those losers short.
Yeah, it's I have a slide for that too in the plan. I mean, it is so freeing to have a plan. Where is this at? Don't worry about what the markets are going to do. No, that's not it. Hang on. The money takes care of itself. Where is that slide? No. This. Pros focus on managing risk, implementing processes, and maintaining the discipline needed to consistently execute their plan, knowing that if they get that right, managing risk, implementing processes, and having the consistency to continuously execute the plan, the money takes care of itself. It will just fall out of the market into your bank account if you have a plan that's profitable, and then you execute the plan emotionlessly. And that is the part where most people go wrong. We're not going to go wrong on that today, Joe. Let's get back to it. We need to look at our exit signals. Plan M exit signals. We have 4 trades on that still are from Plan M. And if I go to the dashboard, it'll make life super simple, because the first reason to get out of these, this is an outlier sell signal. On these 4, KGC, NEM, or in PPTA, they all are sitting on buy signals. So nothing to do. That makes that easy. A 10-20 bearish cross or an outlier block on any of these. Let's go check real quick. So KGC is up 2.5% today. You can see I've been marking up the charts and where we need to roll. There will be no rolls today. I did price those out and nothing looked like I could roll it, and that's fine. But KGC's moving on up, and there's no outlier block, there's no 10-20 cross, so it stays on.
This has been a beautiful trade, Chris. I mean, what are we up to? Like 5 ATRs or something on this guy? This is awesome.
Let's see. 1, 2, 3, 4. Yeah, it was over 5 ATRs earlier today. Yeah. Pretty sick, right?
It's been awesome. Yeah. But I mean, you don't know. There's no guarantees that that's going to keep running tomorrow. So all you need to do is check your exit signals when at the time you want to trade. Just follow your signals. Be happy that it went this far. Don't assume it's going to go further.
No, and you got a great point, right? Because we don't know what the future is going to hold until we get the Nancy Pelosi plan. We don't know how far it's going to run, and we shouldn't put any sort of artificial constraints on it either. If it does not hit your exit signal, whatever that happens to be, you just got to let it run, right? The money is made in the waiting. The money is not made in being active. The money is made in the waiting. Let's go to PPTA. This one does have an outlier block up here at 3703. It's not hitting that today. It gapped up and then it's coming back down. This would not constitute the gap and crap rule, but it has no reason to exit right now. What about NEM? NEM, another one that's up 1, 2, 3, 4 ATRs, but still nowhere to roll to today. No outlier blocks, no 10-20 cross. And then lastly, we've got a 10-20 and we don't have any order blocks up here. So we don't have any reason to close any of these. There's no earnings and none of this is being hit down here. Waiting is the hardest part for a lot of people because they feel like they need to do something. And a lot of time, the only thing to do is just follow your plan. Discipline equals freedom. And you can just sit. Aussie Z Ian is up 191% on KGC. Aussie Ian is dude, he is a badass. Like Aussie Ian should be running the show around here. But what I want to do is let's go mark to market all of these. Now you can get my exact portfolio. This exact file is linked down below. The trading plan slide deck is also linked down below. There is no cost associated with this whatsoever. When you click the link, it looks like this, right? There is no paywall. There's nothing. You get straight over to here. So you can see exactly the trades that I am taking as a professional investor in the US Investing Championship. So let's go mark on the board where these trades are at right now. We'll market to market and see where we're at today. So let's start with KGC. Now with KGC, if I were to get absolutely nothing left on this, I would still be a 10% winner, right? I've already locked in profits on this trade. So pretty sick, but I can continue to let this guy run as far as I can. KGC is currently worth 355. And let me update this, 355, which means I'm up 111% in this position. Not too shabby, Joe. Let's go to PPTA. PPTA is now worth 475. So with the rolls and everything that I have combined, 475, that means I'm up 28% on this trade. Could be better, but you know what? Still profitable. I'll take it. Let's go to the next one. What's the next one? I should have looked ahead of time. The next one is NEM. NEM is worth 1470 right now. So if we go over here and update NEM to 1470, we'll see that we're up 108% on that trade. Outstanding on that. The last one, OR, is at 775. If we update this right here, 775, that means I'm up 51%. So if we go to portfolio returns right now, it says I'm up roughly 48% for the year. We can confirm that we got our calculations correct by looking over here at the final balance around 74,113. Account view 74,075. We're in the right ballpark. Very cool. And then, oh my good gravy. That is what effortless trading feels like. That
Chris, 48%. That's the equivalent of like 6 years worth of trading in 26 days.
Well, Joe, it wasn't because I'm a guru. It wasn't because I am magical or special or anything like that. It's because I had a plan. And that plan involved the outlier buy and sell signals and knowing where to get in and also where to get out. And here's the thing, Joe, is that I have more anxiety right now than most people because I look at this and I don't like marking things to market, but it's great for YouTube because I don't want to know where I'm at until the trades are closed, right? Because we could absolutely see these turn around. And while this one is, let me zoom back in, 100 and something % winner, right? Let's say it turns around and I get out at half of what the current value is worth. I'm only up, or not. If it goes to 0, I'm only up 10% on the trade, right? And I don't want to count my chickens before they're hatched, as they say here in Texas. So I just personally like to just follow the plan. Once the plan is there, then we talk about the exits. Let's also update real quick. SGov is at 100.62. Big money over here, 100.62. By the way, the very first trade that I put on this year was a profit of $4.97. And I would say that I've made up a little bit from that point so far. So
the key word there was profit, though.
Yeah, exactly. This is in the outlier fund. This is in our $50,000, well, it used to be $50,000 account that we started the beginning of the year with. And I'm showing every single trade live here on YouTube. So if you have not subscribed already, you need to do so. All right, Joe, we've already updated our portfolio. We don't need to exit any trades. We can already see that we're killing it right now. What I want to do is shift gears a little bit, right? And talk about how important it is to follow the plan. This is a trading psychology lesson, okay? Because we don't know what the future is going to be. Period, full stop. There's no possible way you could do so. What I want to do is I want to talk about two different trades, MP and EGO. Now, it's really funny because a lot of people, for some reason, I shouldn't say a lot of people, for some reason, there was a chatter back in the Discord a couple of weeks ago about how order blocks didn't work. And I've shown time and time and time again that order blocks do work. This is one of those instances where it came up into the order block and the buyers overwhelmed the sellers. The sellers had no chance. And it ran like crazy, just destroying this order block right here. Now, I got out on this candle right here. Why did I get out? Well, it was part of my plan. But also, outlier blocks represent areas of significant selling. I am not interested in holding into an area of significant selling. And of course, this one happened to blow through it, and that is totally fine. I have no regrets on this trade. Had I held on to it, though, I don't know what would have happened. Remember, in the moment, start new replay. In the moment, you cannot see the future. So when you're on the replay and you're like, okay, cool, following it, awesome, right? That was too fast. Let me go back. Let's try that again. Replay, leave. Oh, replay, start new. Okay. So watch this. This is what it was like in real time, right? Okay. I got in here. I don't know what the future is going to be. Oh, it's a down day. Everybody lose their mind because it's a down day. And then the next day, oh no, it's down again. Oh no, this plan is the worst. I can't believe it. Oh geez, 3 days in a row. This guy Chris has no idea what he's talking about. Oh wait a minute. Wow, what a huge move up right into this area where Chris said, if it comes up into here, I will get out. Now, what could have happened here? What could have happened is it could have done exactly that, right? It could have just come right back down. What could have happened is it could have ran up like gangbusters. I don't know. Oh, geez. I don't know if I'm drawing this. Stop drawing. No, stop, Joe. I don't know how to stop drawing. Oh, make it stop. I really don't know how to stop. Why? Okay, this is embarrassing, but I don't know how to stop. There we go. Okay, you had to right click. Okay. That was a professional YouTuber, professional investor at work right there. Now, because we don't know what the future is, and it goes up like this, there's definitely lots of people who are like, oh, this guy Chris is so stupid. I can't believe that he sold out of it. And the very next candle after that, oh man, it goes up even higher. Oh man, look at this. We're going to the moon. If only he had stayed in, he'd be making so much more dollars. I have a slide for this. Let me find it real quick. This one. If you're not feeling like an idiot often, you're not managing risk. Here's the cold, very cold, dude, bro, it is so cold outside right now. Here's the cold, unforgiving truth. You can take small drawdowns, you can feel stupid, and still walk away with your capital and your future intact. Or you can hold, hope, and on the rare occasion, blow up, right? I left that trade with no regrets because it hit my stop and I exited. That right there is solid trading psychology. Now let's look at a different stock. Let's look at this one. Okay.
Before you go though, Chris, when
Sure.
I look at EGO, I think there may be an opportunity for backtesting here. Maybe there is some, duration of order blocks that makes them just kind of irrelevant. Maybe over 100 days or 150 days, the order block doesn't matter or not. But when we are not in trades, that might be something worth testing.
Totally. Could be, right? Now, this was a double order block, by the way. This is from high set in July 2014 and then high set also in August of 2013. So there's definitely precedence here that the first time it came up into this area, it got rejected.
Mm-hmm.
So, we just don't know the future. And anybody who claims that they do is full of baloney. You definitely should not be buying their overpriced course because they're trying to sell you a dream for sure.
Exactly.
How about we go to a different one called MP? Now, MP we were also in. Okay. So what data we get out of MP? By the way, this exact portfolio manager with the MP trade opened on the 12th and closed on the 22nd, and I made, how much did I make on MP? 18% gains. Okay. 18% gains. I also made 23% on Ego. Okay. I got in, I got my money, I got out. I made 18% on MP. And let's take a look at that, right? A little different story here. So we hit the replay on MP. It's doing its thing. The MP is actually super volatile. It was up 10% on this day and then all over the place. And then today it's down 9.5%. The sell signal came on the 22nd, which is exactly where I got out. Again, keeping 18% of my profit. Today, had you done that, you would be in a big losing position. Now, again, we can't see the future. So following the plan, in one hand, yeah, I left some profits on the table. On the other hand, because I still followed my plan, I kept profits that would have disappeared instantly. So this is actually really important to understand that we don't know the future. All we can do is follow our plans. The plans are meant, assuming you have a plan, the plans are meant to keep you in a trade when it's working and get out of the way when it's not. And you will not be able to find the very top. You will not be able to find the very bottom. Joe, have you got the Nancy Pelosi plan on your account just yet?
No, unfortunately, I don't. So I just have to follow my plan, follow my steps, and I'm going to do, you know, just like we said. And I think I saw Charlotte mention as well. When I see opportunities where I'm like, could I have done that trade differently? Well, when I'm not in a trade, I can go do those back tests. I can prove out what my theory is. And Chris, I've done back tests before based on like RSI and stochastic and things, and they just didn't bear fruit. Well, I can just move on from those, right? Maybe this order block concept has some legs, maybe it doesn't, but if it never comes up, I never know to test for it. But then if I don't test for it, I'm never going to know if I was right or wrong. So it's just an opportunity for you to kind of tweak your plan a little bit and get it where you're comfortable trading it. And I'm looking through our chat today, and I'm seeing so many examples of folks who are doing that same thing. Like there was somebody in here mentioning that they rolled KGC this morning, right? Well, their plan is telling them that they get some signal. It may be in the morning, I guess, and it's time for them to start looking at their trades and acting, right? This person rolled NEM as well. So make the plan fit your lifestyle, fit your ability to trade. And then just like we were just mentioning, you see a signal, you think it has some legs, go ahead and test it.
Dude, absolutely. And like David says right here, it is a completely different feeling when you have rolled so many times that even if the trade goes to absolute zero, you're still net positive. It's a game changer, right? Yeah. That is the reason that we roll. Now, tomorrow in OVTLYR University, Rick had done some incredible backtesting. Kostya and Mark were also doing some great work on Discord over the weekend, talking specifically about rolling, because rolling became the topic for the weekend about how maybe rolling isn't all that great. I can tell you one thing. We can talk theoretical. Yes, I'm giving up deltas, but the reality of trading is I reduce my risk every single time. And then I take that money and put it into anything else that I want to. So in theory, what I'm actually doing is taking money out of the market, risk out of the market while keeping the trade on. And I think it was Mark actually brought up a great point that let's say that you took 50% of your trade off with rolls, yet you still have the same amount of leverage. Right. So you basically have doubled your dollar per leverage, if you want to think about it. Right. And that makes it that much more appealing to me. So all kinds of great discussions are going to be had tomorrow in OVTLYR University. Be sure you subscribe if you haven't subscribed already. So I want to watch this video with you, Joe. And this channel popped up in my feed this morning. Profitable does not equal tradable. And it goes and talks a lot about backtesting. And I watched 2 minutes of it, and I'm like, wait a minute, this is actually really good. I want to share this with all of our outliers today. So let's watch this together. Why most profitable backtests fail in live trading.
You might be muted, Chris.
No, bro, it's not muted on my side. I can hear it. What do you mean there's no audio? I can see the button right there that says the audio is working. Hold on. If this is not working, I'm going to blame Joe because I am a professional YouTuber. He is just a semi-professional YouTuber. Let's see. How about now?
Tradable means it survives.
Oh, now it works. Now it works. Come on.
If your backtest looks great, but your live results collapse, the problem is not execution. It's the way you tested your strategy. Let me give you the main point up front. A profitable backtest does not mean the strategy is tradable. Tradable means it survives normal variations, different market conditions, different periods, normal drawdowns, and real live friction. In this video, I am going to show you why backtests fail live trading. and what you should look for instead. Backtests are convincing for three main reasons. First, the backtest shows real numbers, which feels very objective. You see a profit number, you see win rate, and your brain treats it like it's the truth. Second, the equity curve looks like a proof that the strategy did work. And especially if the equity curve is a smooth line, then you feel like you're in control and the strategy is really good. And third, backtests give you closure. So traders want answers, and the backtest numbers and equity curves give you that answer, even though it's not real. I mean, it's not about real or not, but the backtest, it's showing you something that happened in the past. There is no evidence that this will continue into the future.
And that backtest, under no circumstance, includes panic selling, includes FOMO, includes, oh, my cousin just bought a bunch of silver, I should go be buying it, right? It does not include any of those variables. It is a rules-based approach. Professional investors use rules-based approaches. Now, there's probably some who are like, I'm such a genius, I just gut feel my way to everything, right? Just buy AMD, it always goes up, right? But the reality of trading is you need to create your edge. Just like when you walk in a casino, they have the edge. When you walk into trading, you can create the edge. And you do that with backtesting. Now, where I think he's going with this is that because you have a profitable plan does not mean you'll be a profitable trader because of the emotions that come in with trading. Because it's so difficult to look at your account, especially on a day like today, when our account is up gangbusters, right? Oh no, it's down to 73,000. I started with $50,000. The edge is called SoFi. It's so difficult to look at that and be like, well, duh, everything that I touch turns to gold. Of course it's going to go up, right? But the thing is that that's why you create the plans, is so you can put yourself in those situations to have those type of returns. And they don't always pan out like that, right? It just happens to be some incredible returns all at the right time. I wouldn't call it lucky. If you're calling it lucky, you're not doing it right. You're setting yourself up for the situation. But of course, we don't know what the outcome will be. In this case, the outcome has been amazing. But the outcome could have just as likely been a small loss, because we won't let those turn into big losses. Let's keep going.
Most traders ask, is this profitable? The better question, actually, it should be, how fragile is my strategy?
Now, this is really important. This is something that when Scott and I were, and I saw Scott's here. What's up, Scott? We're working on the backtest last summer. I constantly drilled in his head. It's got to be robust. It's got to be robust. It's got to be robust. It has to be able to work in as many market conditions as possible.
Almost every live failure comes from one of three things: parameter sensitivity, market regime shifts, or psychology. Let's go through each one. Parameter sensitivity means the strategy only works when the settings are perfect. If changing one input slightly flips the result, the strategy is fragile. It's not.
And so I was actually talking about that this morning, where it's like you've developed a plan that always works. Joe, it's got 100% win rate. As long as it's a Tuesday and a leap year, okay, and on February 29th. It has worked every single time, Tuesday, leap year on February 29th. That is not a very robust strategy. Not at all. But it always works, my friend. So it's not something you'd really want to trade. You have to be able to have a robust plan to work, and so you don't have those isolated variables like that.
Not an edge, it's a fitted outcome. And that's where overfitting comes from. Because basically you are fitting all your parameters to match the noise in that market. And you come up with a strategy that it's overfit. The problem is,
Joe, you've heard me talk about overfitting trades in the past, and that is exactly it, right? When you've come up with something that always works, you're ignoring the actual market, and you're focusing in myopic precision to make this one thing fit your plan. Never really had a plan anyway. Mary says, when do you decide to take on new trades? When they fit my plan. Elsewise, I don't trade them, right? And it's probably really boring if you've come here and you've been hearing about how Chris is killing it, and you see Chris hasn't put on any new trades in 2 entire weeks. That's probably pretty boring for a lot of people. Oh man, this guy Chris, he's so full of baloney. But that's the plan. right? The plan is to let your winners run out of control. And when you've got an exit signal, for whatever reason that is, you clip it. And the rest of them, you just let them run.
And Mary, don't forget, you can get the exact slide decks right in the bottom of this video description. You can get them on Discord as well. You can go to Outlier Training with Joe on YouTube, and you can see just how to trade those plans. And from there, you can build your own plan that you can feel successful with trading. So if you're a new person to trend trading, those would be my recommendations.
Totally agree. Let's keep going.
Is the market does not care about your perfect settings. The second point is market changes behavior. So for example, volatility changes, trends goes up, goes down, and finish. Mean reversion also works in uptrends or in sideways market, and that changes over time. So a strategy that depends on one type of market can look amazing in the right window, but it will look broken in the wrong one.
And that's why plan M sits as long as it does, right? I was talking to somebody this morning who he's doing some great work with the active signals, and he had coded out plan M, and he's like, plan M is only in the market 34% of the time. And my thought was, okay. Joe, I don't know if you've heard this rule of thumb. This is one of those things that that traders talk about, but the market only trends 40% of the time. So if plan M is actually back tested coming in at 34% of the time in the market, that's interesting, because that doesn't surprise me whatsoever, right? But it's not meant to be, it's not meant to be day trading. It's not meant to be doing all kinds of stuff, right? The plan is to make money, not to just make trades for no reason.
Yeah, being busy does not mean that you're successful. It just means that you're busy.
Exactly. Let's keep going.
Traders say it stopped working. Most of the time it didn't stop. It's just the market has shifted from what the backtest was looking at.
That's a really, really great point. It's not that it's not working. It's just that this is not the right market for it. Which, you know what you do in that case, Joe?
What do you do, Chris? Edge of my seat.
That's what you do. If it's not the right market for your trading plan, you can actually make money by sitting in cash, not effing up. Now, I use Escove. We talked about it earlier, but some brokers just pay you for holding cash and not doing anything, right? That is a great position to be in. And Escove is paying like 4.3%. Joe, the average annual return in the market is 8%. So if I can get nearly half, of course, this will change over time, but if I can get nearly half of what the market pays on average, sitting out of the way, making sure I don't take any risk, I don't know. That kind of sounds like a good deal to me.
Yeah,
sounds like
really.
a great deal to me.
And if you're one of those lucky people that got a mortgage in like 2010, you're probably making more interest on Escov than you're being charged for your mortgage.
Well, actually, that will be me. So yeah, I didn't actually think about that. You're a great point, Joe. Let's keep going.
Even if the logic is decent, live trading adds its own pressure. Drawdowns hurt psychologically. They make you second guess yourself. Doubts creep in. And if you can't hold through a normal drawdown, the strategy is not tradable for you. Even if it is robust, it's profitable, and everything is okay, it is not workable for you.
I think that's a great point too. Whenever you have a drawdown, meaning you're not at your high of equity, right? A drawdown doesn't mean that you're, going bankrupt or anything like that. It just means like if you've made 10% on the year, but you've had a couple losers and now you're up only 8% on the year, that's a drawdown, right? But there's two different things that can happen. Either you actually have a fundamental flaw in your system, right? For example, trading during a time when your plan doesn't work. That is one of the reasons you could be hitting a losing streak, which means you need to go reevaluate your plan and make sure you're not trading when it's not going to work. Or you just hit an unlucky patch. That is totally possible, right? Because we understand as traders that winning is an inevitable consequence of trading, but losing is also an inevitable, unavoidable consequence of trading. So you have to ask yourself in that moment, by looking at the data, is there a flaw in my plan? Or was it just an unlucky streak? Perfect example of that is in November. We put on several trades. Half of them were in the financials and half of them were in energy. Financials ran like gangbusters. Energy did nothing and it was literally every single energy trade we put on was a loser. Does that mean energy's broken? Maybe. Let's go back test it. So one theory I had was because oil was trending down at the time is, well, if oil is trending down, I wonder what difference that makes to these trades. And so I looked at all the data. That's Scott, who popped up on the screen for a moment and disappeared. I looked at all the trades and I overlaid what the trend of oil was. And in fact, it showed that when oil's trending down, Plan M actually has a higher expectancy on energy sector trades, which is completely counterintuitive of what you would expect. But that told me, Joe, there wasn't a flaw in the system. There's just an unlucky streak, which is absolutely part of trading. What was Scott saying there? Also seeing a max drawdown and a backtest and living through the drawdown are very different things. Yeah, well said. Let's keep going.
This is why the same strategy can be fine on paper, can be making money with another trader, but it's impossible for you to follow in live account. Here is the mistake I see all the time. Traders test performance, they look at net profit, they look at the win rate, they look at the prettiest equity curve possible, but they don't test the behavior. Behavior means what happens when conditions change. For example, does the strategy completely fall apart, or does it bend or keeps going when the behavior change? You can see the behavior through numbers really easy. So let's look at 3 lenses. 1, the trade distribution. Are the results coming from many trades or a few lucky trades?
Right. And so let's pull this up here real quick. Joe and I will disappear. And we're going to look at the distribution down here. And I think this is really, really important. Now, again, we've only got 9 trades on for the year so far. We're in a nice, beautiful win streak, but that does not mean it will last forever. In this distribution down here, there will be some that are wins. There will be some that are losses. And if you want to look at what real distributions look like of real successful traders, I've got that in the slide deck here. This is Plan ETF. This was from Mark Minervini, one of his books, right? Notice the similarity here. A huge concentration around 0, but a huge fat tail to the right, meaning there were some monster big moves, huge up moves, but you limit the losses to the downside. This is what that distribution curve should look like by the end of the year. For the right tab here.
Is the drawdown shape survivable, or does it punch you in the face once a year? And the final lens is dependency. Does the strategy depend on one market phase or one time window, or does it work in multiple? So we can summarize all that in 4 check marks that you can easily do on your own without fancy tools or complicated math. Check number 1. If one small parameter change destroys the results, then your strategy is fragile. Check number 2. If one short time period produces most of the profits of your strategy, then your strategy is fragile. Check number 3. If the strategy's average trade is tiny, then frictions will eat it. So liquidity goes up and down, and in market shocks, of course, liquidity goes away and slippage jumps up. So your average trade needs to be prepared to cover those instances. And check number 4, if drawdowns are rare but massive, then your strategy is, I would say, is still fragile, but mainly it's psychologically very hard to trade.
Oh, that's what Scott was saying earlier, right? How it feels to actually be in those drawdowns is way different than what it looks like on paper. Yeah, exactly.
Believe me, you will not trade the same strategy, even if I show you all the evidence in the world, if your drawdown is 50%. So here is what I want you to do. Stop chasing the best equity curve and start chasing stability across the variations that your strategy trade. Stable strategies often look kind of boring. That's not a weakness. That's the point.
Wait a minute. What did he say? He said trading should be boring. And Nate said earlier, if trading is excited, you're probably doing something wrong. Yeah, I swear. He has to be an outlier. There's no possible way that he's not an outlier. He says all the same things that outliers say. Do you know why, Joe? Do you know why he says all the same things?
He's a professional.
Oh yeah, pretty much. And all of these nuances, all of the things that we talk about here always work because it is how the rules work in the market, right? These are the timeless principles that always work. Does not mean every trade will be a winner, but given enough occurrences, if you have positive expectancy, you can get somewhat close to that edge. Now, of course, you could blow out that edge, or you could come in a little bit under. But the point is that you have an edge to begin with. If you don't have a plan with an edge, then you don't have anything. You're just guessing.
Strategy should be boring but making money. So if you want something that survives, it should not need a perfect condition to trade. It should be trading through ups and downs. It should face drawdowns, but overall, it should be making money with the equity curve pointing up. I'll take this subject further in a coming issue of the Algo Trader. Make sure to subscribe.
Yeah, I like that. That was great. I really appreciate everything that he put on there, because it's the universal truths, right? It's the universal truths that have worked in the markets and will continue to work in the markets. But you know what else is the universal truth, Joe? Is that I think silver is going to get monkey hammered. I don't know when, I don't know where, I don't know how, but I certainly am not going to get in the way and tell it that it needs to come back down. But these moves right here, dude, I'm telling you what, it reminds me so much of GameStop. Reminds me so much of those big 2021 meme stock moves. Silver is the meme stock of the day. I want to compare this to the market cycle real quick so we can have a good understanding of what we're looking at here. Silver before today looked a lot like the belief thrill area. Now it definitely is looking like the thrill area for sure. I mean, if you just look right, this looks a lot like that. But here's the thing, with silver, with gold, don't get in the way. If you are already in on this trend, dude, you're great. You're set. Can it turn around at any point? Absolutely. But think of it like this. There's the 50-80 rule, which kind of falls in with I'd rather be skiing. 50% of the time, when you see something that runs like this, it's going to fall by 80%. And 80% of the time, when you see a boom like this, it'll fall by 50%. I don't want you to get caught on the back foot. So if you're not in these trades already, you're too late. It's okay. That's not a problem. Because if you're trying to get in like everybody else, you'll be trying to get out right at the bottom, just like everybody else as well. So continue to run your plan. Don't change your plan because you had a plan in the first place. That's why we have a plan. So we know what you're going to do. Right, Joe?
And also, if you're thinking about getting into this right now, you want to be checking about the overall market, because the market is 40% of your move. If the market's not trending the way you want it to go, getting into anything right now might be risky.
Joe, it's very possible that we could see a turnaround and actually get back into new Plan M trades real soon. That would be crazy, right? Mm-hmm. So let's see why we didn't take a Plan M trade today. You know, I think somebody was asking about that. Let's take a moment to look at it real quick. Why did we not get into a Plan M trade? Hold tight here. SPY is in a bullish trend. And we can see that here with the OVTLYR trend template. The 10 EMA is over the 20 EMA, price is over the 50 EMA. And Joe, I'm pretty sure the receipts are on YouTube when I said specifically, if we get a big candle up here, then we'll still be in a bullish trend. I'm just a random guy on the internet. I don't know what I'm talking about. If we did not get this big candle right here, mathematically, it would have been a bearish trend. We're still in a bullish trend. Okay. Next, the SPY buy signal. Popping into OVTLYR makes it super easy. You can see it has a sell signal as of January 22nd. Now, could that turn around by tomorrow? It could. I honestly do not know all the details that go into these calculations. Mark wouldn't tell me because he knew I'd blab it on the internet, right? But the market gods could smile upon us. I was mixing shine and smile. So the market gods could shile upon us, Shia LaBeouf upon us, and grant us some new opportunities tomorrow with a buy signal. Now, the fear and greed has to be under 70 and rising. It's under 70, but it's been falling. It's at 56.85 today. And then full stocks breadth. Let's go look at full stocks breadth over here. And come on. There we go. Full stocks breadth. Almost there. By the way, little revelation I'm going to share with you guys real quick in just a second. Full stocks breadth is still bullish. You have the bull list percent, meaning the number of buy signals over the 10 EMA. So that's still happening. OVTLYR channels. hey, you know what? It's very possible that we could see the outlier channels popping back up where we have more uptrends and less downtrends. So, Joe, it is in the cards to happen this week. It totally is. But we aren't going to jump the gun. Okay. That is the whole point of building it into the plan, so that if any one of these reasons fails, you don't take the plan. In fact, when I worked with Larry Hite, the first $1 billion hedge fund manager, he said specifically, find every reason in the world not to take the trade. So if any one of these are true, you don't take the trade. But if you can't find any reason to take the trade, you're obligated to take the trade.
Yeah, you have to take the trade at that point, because you need so many data points in order to meet your expectancy, right? So if you're not taking trades that meet your criteria, then you're not meeting your expectancy. So you're literally not trading your plan. So you got to take it.
Exactly. Well said, Joe. Now, the revelation that I was going to talk about is this. I was sitting on the couch in the frozen tundra of Texas yesterday, and I was like, I wonder, because we have now added, there are now 9,000 stocks and ETFs inside of Outlier. Can you believe that? 9,000.
Wow. The servers are melting.
Yeah, the servers were melting for a minute, but we got all 9,000 in. One thing to keep in mind is that not all of them have enough data to produce the buy and sell signals. You've probably come across some here and there that say like not enough outlier data. So it'll still show you the uptrends. It'll still show you the sector information. It'll show you basically everything with the exception of the stock's own fear and greed and the buy and sell signals. But 80% of it's all there for you. So I was thinking about that while sitting in the frozen tundra. And I was like, okay. So I texted Mahesh and I said, will you confirm this for me? All 9,000 stocks are built into this. When you look at the full stocks down here, all 9,000 stocks are built into the uptrends and downtrends. However, all 6,000 stocks and ETFs with buy and sell signals go into this number here, because some of them don't have enough data. They're in the system. We're collecting data actively, but they aren't ready to have the buy and sell signals produced just yet. It looks like Huckleberry Steve says USAR. Let's see if that's one of them real quick. So I want to show you what it looks like. I'll show you what it looks like. USAR. No, USAR is there. Hang on. It's got some Dow Jones. Hang on. Let me refresh this real quick. Okay, there we go. Yeah, I had clicked in too fast and still had some Dow Jones stuff on it. If you see one like this, outlier data is unavailable for this symbol. You're still going to get the uptrends and downtrends. You're still going to see the sector information, okay? And this will fall into the uptrends and downtrends. But because this is one of the 3,000 or so that are in the system but don't have enough data yet, it is not reflected in the bull and bearish percent. I just want to put that out there. This is something that I thought about yesterday. And now you guys know as well, when you're looking at this, this is all the stocks in Outlier with the uptrends and downtrends and all the stocks in Outlier that have the buy and sell signals. So Joe, if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
Well, I would recommend the path that I took, which was becoming an Outlier subscriber for 82 cents a day.
That's a great idea.
When you start getting those signals, you're going to need to know what to do with them. You can learn what to do with them by following the plan at the bottom of this video, the exact plan that Chris is trading, and then you can watch some videos right up here, and that'll give you more information about Outlier.
I love it. Our whole evil plan is to make you profitable. Sorry, not sorry. You guys have a fantastic day. We'll talk soon.